Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the Wall Street jungle and figure out if these big companies are actually doing as well as they say they are. Today we're diving into an update from BlackRock Monticello Debt Real Estate Investment Trust. Sometimes these financial folks might seem like they're speaking a different language. But understanding what they're up to is super important, so let's decode this together. And hey, if you like getting these kinds of clear, no-nonsense breakdowns of corporate filings, make sure you hit that subscribe button. Also, we've got a fantastic community over on Discord to discuss all things finance, and you'll find the link in the description below. Alright, we're looking at a Form 8K filing here. Think of this as a special announcement from a company filed with the US Securities and Exchange Commission, or the SEC, for anything important that happens between their regular, more detailed reports. This particular filing is dated the 31st of October 2025, which is also the earliest date of the event they are reporting. The company behind all this is BlackRock Monticello Debt Real Estate Investment Trust. Their name tells you a lot. They're a real estate investment trust, or REIT, which basically means they own, operate, or finance income, generating real estate, and the debt part suggests they are likely focused on lending money for real estate projects, rather than owning the properties outright. Now, what is the big news they're announcing today? It is all about distributions. Think of distributions as how these companies share their profits with their shareholders. It is like a dividend, but for REITs. The important date here is the 31st of October 2025, the very day this report is filed, and also the day they declared these distributions. So, what are the numbers? They've declared distributions for each class of their common shares. For Class FI common shares, the gross distribution, that is the total amount before any fees, was $0.1927 per S-share. And for Class E common shares, it was also $0.1927 per S-share. This particular amount reflects a distribution of $0.1927 per S-share for the entire month of October. It is a flat rate across these two share classes, which is interesting. Now, let's look at the servicing fees. Fees are what these companies charge to manage the money and the accounts for both Class FI and Class E shares. The shareholder servicing fee was $0.000. That means there were no shareholder servicing fees charged for this distribution. This is a really good sign for investors, as it means more of the company's generated income is going directly into the shareholders' pockets. And because there were no fees, the net distribution, which is the amount shareholders actually receive or that gets reinvested, is the same as the gross distribution. So, Class FI shareholders will see $0.1927 per S-share as their net distribution. And Class E shareholders will also receive $0.1927 per S-share. The report mentions these net distributions are payable to shareholders who own shares at the close of business on the 31st of October 2025, and they'll be paid out around the 20th of November 2025. Investors also have the option to have these distributions paid out in cash, or to have them automatically reinvested into buying more shares of the company, which is a great way to compound your returns over time if you believe in the company's long-term prospects. And to wrap things up, we see the signature from Barry W. Zarvis Jr., the Chief Financial Officer. He officially signed off on this report on the 31st of October 2025, confirming these distribution details on behalf of BlackRock Monticello Debt Real Estate Investment Trust. Him signing off means he is certifying that this information is accurate to the best of his knowledge. So, what is the big picture here? BlackRock Monticello Debt Real Estate Investment Trust is clearly returning capital to its investors. The fact that there are zero servicing fees for these distributions is a big plus. It shows the company is being efficient and shareholder friendly with its operational costs, at least for this specific payout. This could indicate strong underlying performance in their debt real estate portfolio, allowing them to distribute without eating into investor returns with fees. However, this is just one distribution announcement to really get a feel for the company's health. We'd need to look at their broader financial statements, like their balance sheets and income statements filed in their quarterly and annual reports. We'd want to see if their lending activities are consistently profitable if they have significant loan defaults, and how their overall debt portfolio is performing in the current economic climate. For now though, this is a positive signal for investors holding these specific share classes. Alright, that is our breakdown of BlackRock Monticello Debt Real Estate Investment Trust's latest filing. What is your take on these distribution numbers and what they mean for the company's future? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord community in the description for more discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.